Hey, what's up, my friend? So in today's video, I'm going to share with you MACD indicator trading secrets. Okay, these are the stuff that, I've not seen anyone share on the internet before. Okay, so you're going to be in for a treat. And no, I'm not going to talk about, how the MACD line cross up, you buy, or it cross down, you sell. Nothing of that sort. In fact, what you'll learn, right, is number one, how to use the MACD indicator to identify momentum reversal and even predict market turning points. Wow. Number two, how to use the MACD indicator to help you increase, right, your winning rate. And finally, how you can use the MACD indicator, specifically the MACD histogram, right, to actually identify explosive breakout trades about to occur. Sounds good, right? So here's what I want you to do right now. So below this video, hit the subscribe button and the thumbs up button, right? So this way you'll always be up to date whenever I publish a new video. So take 2 seconds. 1, 2, you done it? Okay, so let's begin. So first thing first, right? If you know, right, I like to always, talk about the indicator itself before talking about how to use it, because if you do not understand how the numbers, the lines are derived from the indicator, it won't make much sense later on. So this is why we always go back to fundamentals. What is a MACD? So the MACD indicator has 3 parts to it, right? Let me explain to you what they are. Number one is what we call the MACD line. This line is derived, right, by taking the 12-day moving average. The founder, Gerald Appel, he used the exponential moving average, right? The 12-day exponential moving average minus the 26-day exponential moving average. This is where you get the MACD line based on this calculation. The signal line is simply the 9-day EMA of the MACD line. So 9-day EMA of this MACD line. And finally, the MACD histogram is where you just take the MACD line minus the signal line. So if the MACD line, let's call it X, signal line, call it Y. So this is the, let's call this P, right? The MACD histogram is going to be P. Okay, so these are the math behind it. And if it sounds confusing, don't worry, because I'm going to illustrate it with the charts right now, so everything will be crystal clear. So over here, you can see that this is the MACD indicator. Okay, so I'm going to just walk you through what they are. The orange line here is the signal line. The blue line over here is the MACD line. And this red thing you see and this blue greenish thing that you see, it's called the MACD histogram. So let's understand how all this, indicator goes up and down. If you recall, the MACD line, what's the formula? Well, it's just the 12-day EMA minus the 26-day EMA. So if you want to see, just pull out the indicator. I've got the 12-day EMA and the 26-day EMA over here, which is shown by this red line, 12 EMA, and this blue line is the 26-day EMA. So right now, the value of this, right, I can tell you is about this this blue line is the MACD line. The value right now is about minus 2.6. All right, let me just redo this. The MACD line value right now is about minus 2.6. How did I get that? Very simple. If you just take the red line over here, find out what is this value, the latest value, okay? This value minus this value, the blue one, the latest value. This, right, let's call this X. X minus this one, let's call it Y. It's going to give you negative 2.6. Basically, the difference between this red line and blue line gives you negative 2.6, which is the MACD line that you see over here, this blue line. Okay? That's how we get the MACD line. What about the signal line? Well, signal line is quite straightforward, right? Recall, the signal line is simply the 9-day EMA of the MACD line. So to put it simply, right, it's just simply the average of the 9 values of the MACD line. So let's say, for example, the MACD line has a value of, which is this blue line. It has a historical value of, let's say, 5, 10, 20, 13, 14, 15, how many numbers? 1, 2, 3, 4, 5, 6. All right, call it another one, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. One more number. Okay, so right now we got 10 numbers, right? 5, 10, 20, 13, 14, 15, 7, 8, and 10. So what you'll do is you calculate the, let's imagine that all these numbers is actually this MACD line over here, the blue line. Okay, you add all of this up and you divide by 9. Divide by 9, right? And the answer, right, let's say the answer is X, right? Will be your value of your signal line, because the signal line is just simply the 9-period moving average of your MACD line. Simple as it is, right? So that's how you get the orange line. And finally, how do you get the histogram? Okay, so the histogram is, if you recall again, let's go back to the slides, right? If you recall, the histogram is simply the MACD line minus the signal line. So again, you just take this MACD line. Okay, MACD line is the blue one over here. The blue line minus the orange line, right, will give you the histogram value. Okay, so all you need to do is to find out what is the value of this blue line over here, MACD line, minus the value of this orange line over here. And then what you'll get is the value of this histogram over here. Simple. And one thing to share with you is the histogram, right? What it does is that it measures momentum in the market. So you can see that as the space between the MACD line and the signal line over here, the space here is getting wider. Notice it, the space between the two lines is getting wider, is where your histogram starts to slope up. Okay? When the space between the MACD and histogram, between the MACD and the signal line starts to tighten, this is where you notice the histogram starts to slope down, right? Notice the space between here getting tighter and tighter, right? Between the two lines, tighter and tighter over here. So that's pretty much, right, all there is to the MACD indicator. Now you've learned, how the numbers are derived, right? You can actually use the indicator for different purposes as what I'm going to share with you right now. Okay, so now basics is covered. Let's move on. So generally, right, the MACD histogram, it's a trend following indicator and a momentum indicator. You can measure momentum, right, using the histogram. Okay, so first thing first, let's talk about how you actually, measure momentum and identify, reversal in the markets. So just to share with you briefly, right, let's say whenever you're trading support resistance, right, market is, in a range, okay, and you know that, you want to sell at resistance. And I'm not sure if, you've heard of me say it before, but whenever the price is at resistance, right, it doesn't mean you go short immediately. Instead, you want to see how the price approaches resistance. For me personally, I like to see a very strong, bold, and clean move coming into resistance. I like to see strong momentum coming into resistance, right? Where you see large bodied candles. Why is that? The reason is simple, right? When you get a strong move up higher, right, the reversal can be just as swift, right, quickly towards the downside. Okay? What you don't want to see is that, for example, this is the range, right? Market comes up, then it slowly chop its way up, right? Hover around resistance. This type of price action, I don't want to short the resistance, right? Because it shows you that there is sign of strength, right? Market making a series of higher highs and higher lows. These are the type of setups that I don't want to short resistance. I want to see strong, bold, and clean move, right, coming into resistance. So now the question is, how do you define this strong momentum move? This is where the MACD, right, comes into play. So number one, you want to move into market structure like, support, resistance, trend line, etc. Number two, you want a MACD histogram to show you strong momentum, right? Show you that there is an imbalance of buying or selling pressure. And then number three, you can just look for a price rejection, right, as an entry trigger. So let me explain with you, right, with the charts, right, obviously. If not, it's quite hard to visualize what I'm saying. Okay, so first thing first, let's have a look at the pound New Zealand. So you can see over here, now we don't need this 12 and 26, we remove it, right? You can see that over here, this is what I'm talking about. Note this. Over here is an area of support, right? You have a market coming into this area of support. How do I know it's a strong momentum move? Pay attention to the MACD histogram, right? When you see the MACD histogram showing a strong bearish momentum, right, where the histogram, the bar is getting larger and larger, it's telling you that there is strong momentum in this market. And whenever you see a strong momentum coming to support, it's where you want to fade the move. It's where you want to go counter against the dominant move lower. Right? This might sound counterintuitive, right? But the market, right, is more likely than not to reverse higher after making such a strong decline. All right, but there's no guarantee. So this is where you can use, basic candlestick patterns like, hammer, bullish engulfing, or, price rejection patterns, right, to so-called confirm that the market is about to reverse higher. And in this case, you got somewhat of a bullish reversal pattern, right, signaling that the market could possibly head higher from here. Okay, so this is what you want to see, right? A move into support, strong bearish momentum, right? You don't want to see weak bearish momentum. You want to see strong bearish momentum, telling you that there is an imbalance of selling pressure. All right, and this tells you that whenever there is a strong move lower, the market could just as swiftly reverse back towards the upside. So this MACD histogram, it's a sign to tell you, right, that there is a strong momentum move lower. Let's look at another example. Okay, pound yen. So again, right, over here, market coming into an area of resistance. Right, this resistance that I've drawn over here. Notice, right, strong bullish momentum, right? Looking at the MACD histogram is getting higher and higher over here. Strong bullish momentum. This is what you want, right? A strong momentum into market structure. And then you can use a tool like, again, candlestick patterns, bearish engulfing, shooting star to time your entry. In this case, you got this one over here, okay? And then the market hover a while at this level before it came down lower. But the key takeaway again is market structure with strong bullish momentum, right? Before you look for a short setup. Let's have a look at one more example to nail home this point. So again, this one, let's see. Okay, this one over here, notice, right? Market structure, resistance, strong bullish momentum coming in, right? So if you get let's say a bearish reversal candlestick pattern, this is a type of move, right, that you want to be shorting because there is strong momentum coming into a level. So you can see that over here, right, you did get somewhat of a price rejection, right, before the market consolidate and then it breaks out higher. So you might get stopped out, or it's a small win depending how you manage the trade. But I hope you understand this concept that I'm trying to bring across, right? So let's move on, right? So again, a move into market structure. MACD histogram shows strong momentum, and then you look for a price rejection, right, in the form of candlestick patterns, like hammer, shooting star, etc. Number 2, trend filter. Okay, before we talk about trend filter, right, I want to go back to the momentum one again. So this one over here, right, it's actually a strong signal, right? So you know that whenever you see a strong momentum move lower, like for example in this example, right, strong momentum move lower, right, you know that the market, right, is more likely, right, to actually reverse. So this is a strong signal to tell you not to short the markets. I know it can be tempting, right? Wow, look at this, a strong bearish candle, right? Market, heading down strongly. It's going to break lower. But this, I know it sounds counterintuitive, but whenever you see strong momentum into a key level, you don't want to be shorting it because the so-called the meat of the move, right, is probably over, right? It's too late to enter. So this would help you, filter, right, breakout trades. Don't chase breakout. Don't trade breakouts, right, when there is strong momentum on your MACD histogram, because by the time this MACD histogram shows you strong momentum, the breakout would have already moved very far in your favor, and it's not going to be favorable trading breakouts because number one, market has already moved so much. If you enter right now, you might get stopped out on the retracement or the pullback. If you don't, right, that means you have a very wide stop loss. Chances are your stop loss might be above this high, very large stop loss, which actually reduces or offers you a very poor risk to reward on your trade. So don't chase breakouts whenever you see a strong momentum on your MACD histogram. This is a very useful, another filter that you can use, right, when you're trading breakouts. But we'll talk more about breakouts later, right? So this is just a extra bonus tip for you. Number 2, right, you can use a MACD, right, as a trend filter. So here's how it works. If the higher time frame MACD line crosses above the signal line, you look for a long bias only, right? Higher time frame. We're looking at higher time frame here. If the higher time frame MACD line crosses below the signal line, we look for a short bias. So how do we define higher time frame? So here are a few tips, right? If you are trading off the daily time frame, you can refer to the weekly time frame as your higher time frame. If you are trading on the 4-hour time frame, you can refer to the daily time frame as your higher time frame. If you are trading on the 1-hour time frame, then you can refer to the 4-hour time frame as your higher time frame. So you're pretty much using between a factor of 4 to 6. So what is 4 to 6, right? So if you just take the this 4-hour over here, divide by 1, that is a factor of 4. The daily has 24 hours, divide by 4, that's a factor of 6. Weekly has 5 daily candle bars, so that's a factor of 5. So anywhere between a factor of 4 to 6, right, that would be your higher time frame. So again, let me just, go through the charts and share with you a few examples. Okay, so let's have a look, right? This time around, Aussie dollar, right? Just an example, Aussie dollar. Okay, so let's say we are trading off the daily time frame. All right, so our higher time frame is the weekly time frame. So if you look at the weekly time frame, you can see that over here, right, the blue line, which is the MACD line, it crosses below the signal line. So in this case, right, from 5th of March 2018 onwards, you want to have a short bias, right? So if you look at the daily time frame, 5th of March 2018 is somewhere about here, around this region, right? You can see that you have a short bias, and you would be on the right side of the trend more often than not, and it will likely increase your winning rate because you're trading on the right side of the trend. Okay, so that's how you do it. Another example, right? Let's have a look. Right, how about Brent crude oil? Okay, so again, let's say you're trading off the daily time frame, so your higher time frame is the weekly time frame. So just go to weekly and pay attention to the MACD signal line. Okay, so you can see that over here right now the blue line has crossed below the orange line, so it's telling you that, hey, on the daily time frame, if you're trading, you want to have a short bias, right? Staying on the short side. Okay, so if you go look at another example, let's see what else. How about let's try New Zealand dollar. Okay, just one more example to hit home my point, right? Let's say the weekly time frame again, right? Okay, so you can see that over here, the blue line, which is the MACD line, crosses below the signal line, all right? So you want to stay short, right, from 16 April 2018, right? So on the daily time frame, 16th of April 2018, which is about here, okay, about here, you would, have a short bias all the way down towards the downside. So again, keep you on the right side of the trend more often than not. So this is how you actually use, right, the trend filter to trade in the direction of the trend with the MACD. Now, finally, right, how do you actually identify, high probability breakout trades? So you've seen earlier, right, that when you trade breakouts, right, I said earlier that you don't want to be trading when the MACD histogram, the momentum is very large, because that's when the move has already occurred. So this should, give you an idea to, how you should be trading breakouts. Number one, you look for a build up and market structure. Again, market structure could be support, resistance, trend line, moving average, etc., etc. Then you want your MACD histogram to show low to no momentum. So what you want to see, right, from a price action perspective is that if you want to trade a breakout, let's say a breakout of resistance, what you're looking for is this tight build up over here, a tight consolidation. But I do understand, right, sometimes, traders, they have difficulty identifying or defining what is a build up or not, whether the consolidation is whether is it tight or not. So this is where your MACD histogram can help you, right? What you want to see is low to no momentum. So your histogram should be very flat, almost like close to a straight line. So I'll explain. Okay, so again, let's have a look at the charts. So let's have a look at let's say Brent crude oil. Okay, and looking at the weekly time frame, right, over here back in 2014, right, you can see that over here, look at your charts. You can see that the market is pretty much in a low volatility period. It has a series of higher lows, right, but over here volatility has shrank. Okay, and if you look at the MACD histogram, right, notice you can hardly see the histogram popping out at all, because it's telling you that, hey, number one, volatility is low in the market. So this is where it's primed to be trading breakout. To be honest, I have no idea whether the market would break out higher or lower. So this is why you just let the market show you, right, which direction it wants to trade. And in this case, the market broke down lower, okay, and after which, right, we have this strong collapse, right, of oil in 2014. So this over here, you can see that the histogram is a pre-warning over here, right? This over here is a warning to you that the market is about to make a big move. Higher or lower, it's anyone's guess, but this is a clue that the market is about to make an explosive move. Okay, let's share with you another example. How about soybean futures? Okay, so let's look at this concept again. I'd like to share a few examples, so I understand that one example usually isn't enough. I have to look at a few examples usually to get a point, because I'm a bit of a slow learner. Okay, so soybean, okay, over here, you can see again, notice, right, that you have this range over here. Okay, and you pay attention to the MACD histogram again, volatility here is shrinking, right? It's not as small as the crude oil you've seen earlier, but it's still small relative to the earlier, histogram peak and troughs, right? So you can see that over here, this one again, volatility is dying out towards the end. It's pretty much like one straight line. So you can see that this is where the build up is formed at this resistance before the price, break out higher on soybean. Okay, let's have a look at one example now as well. right? It has not break out, right? We'll see what happens on this one is Bitcoin. If you look at Bitcoin right now, daily time frame, notice, right, over here, right, volatility is high, right? That's why your histogram, right, is showing such, you know, strong peak, right? Strong momentum, bearish momentum here, right? And you look at it in recent times, this is where your histogram gets interesting, and you notice that market seems to be you know, kind of died out, right? So you can see over here, volatility in this Bitcoin market has died out, right, based on this histogram that you see over here. So if whichever direction that, you know, Bitcoin breaks out, right, you can expect volatility to pick up and, you know, to expect a big breakout move here on Bitcoin. And this is where, you know, your MACD histogram is giving you a heads up. Okay, so you can kind of treat this like a volatility indicator, right? The MACD histogram telling you know whether the volatility is high or low in the markets. All right, so that's it, right, for this section. So with that said, right, let's do a quick recap. We've covered quite a bit. Number one, you can use MACD to identify momentum reversal in the markets, right? When price comes into a key market structure like support, you want to see your MACD histogram having, you know, strong bearish momentum. And then if you get a price rejection, a reversal candlestick pattern, that would be a possible entry trigger to go long. Okay. Number two, right, we talk about trend filter, how you can actually trade on the right side of the trend using the MACD, the signal line and the MACD line. We will look at the higher time frame. We would see whether the MACD line crosses up or down. If it crosses down, you want to remain a short bias, right, until the MACD line crosses up again, right? We're using 2 time frames in this instance. And finally, right, I shared with you how to identify high probability breakout trades using MACD, right? Number one, you want price to come to a key market structure and form a build up. If you can't identify a build up, use your MACD histogram. What you're gonna see is that your MACD histogram is very flat, like you know, in a ER hospital, right? The patient is almost dying, go tee, right? You want to see that on your histogram. It's telling you that there is low volatility in the market. So that's where you can prime yourself for a possible explosive breakout that could occur. Okay. So with that said, right, I hope you have enjoyed this video. If you want to, you know, learn more, right? Today we talk about indicators. If you want to learn more about price action trading, something that I have, you know, mentioned a bit in this video, go down to my website, tradingwithrainer.com over here. All right, then you scroll down a little bit, right? And there's this guide over here called the Ultimate Guide to Price Action Trading. Click this orange button and I'll send it to your email address for free. All right, so with that said, I've come towards the end of this video. If you enjoyed it, right, hit the thumbs up button, subscribe to my YouTube channel, and leave a comment below if there's any question for me or anything that you want to share. I will read every one of them. So with that said, I'll talk to you soon.